There is a new player in the world of financial technology, one that's large enough to compete with the established players in an ever-increasing crowd of fintech startups. That company is Walmart. Hey everyone, and welcome to FinTech. And in this video, I'm going to be talking about why Walmart, of all companies, decided to start a fintech startup, what this could mean for both them as a company and the market in general, as well as what risks and opportunities I see for this venture in the future. Lastly, stick around until the end of the video to see whether or not I personally decide to invest in Walmart based on this news. So I think we all know what Walmart is. It is an absolutely massive retailer who has operations in over 25 countries and is the single largest private employer in the entire world. In fact, it's the largest organizational employer behind only the US Department of Defense and the Chinese military. It also produces the most revenue of any public company in the world, and even though it is public, the Walton family still owns over 50% of the ownership in the company. Their business model is essentially built on providing as low-cost goods as possible to as many people as possible. Back in the 1960s, when Walmart was first getting started, they managed to beat their competition by providing lower prices to consumers than their competition could. They did this at first by looking for lower cost suppliers to save money, and then as they began to grow, they used their massive scale to negotiate rock bottom rates with those suppliers. This allowed massive amounts of value to flow back to the consumer, and they rewarded Walmart by continually buying from their stores, allowing them to expand even more. This company is a masterpiece of logistics and supply chains in an area where they may only be rivaled by Amazon. More recently, they have begun making aggressive moves to compete with technology companies, providing online grocery shopping for their stores, producing their own pre-made meal kits to compete with companies like HelloFresh, and they are even rumored to be starting a low-cost video subscription service to compete with Netflix. With their hands in so many different pots, it was really just a matter of time before Walmart decided to enter the financial technology space. And who better to partner with than Ribbit Capital, one of the venture capital firms behind the Robinhood investing app. Walmart isn't totally new to offering financial services. They already have the Walmart Money Card, which is a prepaid debit card that you can use in the store, and they also offer payment plans for more expensive items. Additionally, back in 2005, Walmart actually attempted to get their own banking license, but they were met by internal resistance from within the banking industry, and they ultimately abandoned that approach. So clearly this has been on their radar for a while, and it's only now with technology fueling the rise of new financial companies that Walmart is getting back into the ring and trying to do this once again. And it makes sense. Walmart's demographic typically skews toward the lower end of income earners, and it actually pretty closely matches their own employees. This group provides a potentially huge untapped opportunity for financial services. In the United States alone, 6% of adults don't have any sort of checking, savings, or money market account. Additionally, around 16% of adults are considered underbanked, which means they might have a bank account, but they still make use of short-term solutions like payday loans and pawn shops, which can ultimately end up costing them a lot more money in the long term. If you can actually bring financial services to this group, you can not only access an untapped part of the market, but you'll actually provide a benefit to those people by offering higher quality financial services than they currently have access to. One of the main reasons that historically this group does not use financial instruments is because they don't trust them. When your main experience with banks is being charged overdraft fees when you try to pull out money from your account, and your only experience with financial instruments is payday loans which try to take advantage of you when you don't have enough money to cover your bills, it makes sense that you would be wary of traditional finances. Because Walmart has already established itself as a trusted brand among this demographic, this could give them potentially a huge leg up in appealing to this demographic by offering them financing. Plus, they can provide a physical location for their customers to go to in the front of their stores, so the customers don't have to go to a separate location, and Walmart doesn't have to run any separate locations either. So what effect could a company as large as Walmart starting a fintech have on the existing fintech market? Well, there is actually precedent for a very large retailer taking a very similar move. And for that, we need to look to China. Alibaba is sometimes referred to as China's Amazon, but they are involved in so many more areas than just e-commerce. One area where they are absolutely dominant in China is financial services. Their service Alipay has over 1 billion users, with over 5.5 trillion US dollars equivalent transferring through just their mobile app alone. They also operate the largest single money market fund in the entire world, with some saying that as much as 1/3 of China's population having money in that fund. around. Now, obviously, both Alibaba and Walmart are just enormous companies, but Walmart is similar to Alibaba in another way. Back in 2003, when Alipay first launched, there wasn't much trust of traditional brands in China. Due to a fairly lax regulatory system, it was pretty common for people to produce knockoff goods that copied mainstream brands, and so the consumer could never really trust that the quality of the product that they were buying would be guaranteed by just looking at the brand on the label. This low level of trust in traditional brands meant that there was a huge opportunity for a company to come in, establish trust with their customers, and grow into an absolute monolith, which is exactly what happened with Alibaba in their e-commerce platform. They were then able to leverage this trust to launch Alipay, and now of course they have a huge user base in China. To me, this traditional lack of trust in China has some very strong similarities to the demographic that Walmart is targeting. People who don't trust traditional financial instruments, but do trust the brand that Walmart represents. People might make fun of Walmart for being low quality, but the fact is, when you go to Walmart, you know what you're going to get, and you know that you're going to have a relatively consistent experience every time you go. Even that basic level of trust could be huge for finally cracking open the market of the underbanked both in the US and abroad. The potential opportunity here is clear. Walmart could absolutely dominate the 16% of the market that is currently underbanked, and that's assuming that they wouldn't capture any of the existing fintech market from people who do have banks. Given their track record of consistently offering cheaper services than anybody else, it would be very surprising to me if Walmart couldn't win over at least some customers from existing platforms. So if that's the opportunity, what risks are there for Walmart? Well, luckily for them, the risks starting out are fairly small. They're calling this a fintech startup, which is implying that they're going to start small and let it grow organically, rather than pushing a whole bunch of money into it up front. This seems like a good approach because yes, it avoids a large financial risk, but it also gives you the opportunity to interact with your customers and figure out what they actually want before you scale the operation. One minor risk, if this does become successful, is getting into the fintech space will tie Walmart more closely to the financial sector. Right now, even if there's a recession, Walmart still makes money because people have to buy groceries to eat. If Walmart becomes highly invested in the financial sector, they're going to become a lot less immune to these kinds of fluctuations. Now, aside from those, the biggest risk that I actually see for Walmart here is regulatory risk. While Alibaba might be able to grow into a behemoth that dominates every market in China, in the US, when companies get large enough, they always face the risk of being broken up as a monopoly. In fact, this is one of the fears that has plagued Amazon for years. Now, while this is a risk for Walmart, I think it's a risk that they have to take. Barring any kind of regulatory action, Walmart's biggest competitor, Amazon, is going to keep growing and expanding into new markets. In order to keep up, Walmart has to do the same thing. Right now, Amazon has an advantage because they operate several high-margin businesses, including their streaming service as well as Amazon Web Services, in addition to their low-margin e-commerce business. Walmart would definitely benefit from exploring potential high-margin businesses for themselves so that they can use the huge amount of traffic that their low-margin retail business has to drive some of that traffic towards some higher-margin businesses like financial instruments. So what will I be doing with my money? For me, this is a wait-and-see play. I'm not super interested in investing in Walmart's legacy business with its low margins and a market that's basically already tapped out. I do think that this fintech play for Walmart could be wildly successful, but with a company as large as Walmart, by the time their financial services grow large enough to actually move the needle in terms of their earnings, we'll have seen that coming for at least a few quarters, so I'm not worried about missing out on the opportunity. I'm just going to follow the stock, and if a few quarters or a few years down the line, if it looks like their fintech startup is going to grow into a huge company like Alipay, I'll invest at that time. But let me know in the comments what you think about Walmart becoming a fintech company. Hit the like button and subscribe if you enjoyed this video, and I'll see you next time.